Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Alibaba shares surged to their highest level in nearly 4 years after revealing plans to ramp up AI spending.
Plus, Stargate takes shape. 5 new data center sites in the US planned as OpenAI plows $400 billion into AI infrastructure along with partners Oracle and SoftBank.
And Jimmy Kimmel returned to TV Tuesday night saying it was never his intention to make light of the murder of Charlie Kirk. We have the latest.
Let's turn our attention, though, to the markets, which are flat on the day at the moment. Ed, I'm looking at the Nasdaq up. Well, we're currently lower by 0.1%. We have been trading higher. Look, we've got sensitivity to the macro data. Home sales come in strong. Yields on the bond market, therefore, push higher. Also, though, the bond market, the US Treasury market, being affected by a big corporate debt sale coming from a big tech player, Ed.
Yeah, there's a lot of stories to get to in the program. You are right. Oracle shares are down, but it's a debt story, tapping corporate bond markets for $15 billion of debt, including a very rare 40-year note. In the program, we're going to get to that and their role in what's happening with OpenAI and the Stargate build-out. Alibaba having a really strong day, simply pledging to spend even more on AI than the $50 billion they already disclosed. And then Micron, strong forecast for the current period, in line with consensus, above consensus, but as you know, is always the case. There are elements of the street that were even more bullish. They wanted to see more from the memory maker in the role that it's playing in AI data centers, Karen.
Certainly when it's added 40% to its share price in just this month alone, Ed. But first, it is United Nations General Assembly. It's still underway this week here in New York, and we now go to the UN Rose Garden, where Bloomberg Surveillance's Anne-Marie Jourdain is standing by with a special guest.
Thank you so much, Caroline. Well, as far as the UN General Assembly goes, this one was of note. The past 24 hours, we saw really a massive geopolitical shift from the rhetoric of President Donald Trump. And I'm so glad right now to get the insight of what this means for Europe. She's Europeans' top diplomat and also the former Estonian Prime Minister, Kaja Kallas. Thank you so much and welcome to Bloomberg TV.
Thank you for having me.
So yesterday, President Trump came out with this post on social media saying he thinks Ukraine can actually get back all of the land, a very different tone than what we saw from him even just 3 weeks ago. He said that the European Union would have to be on board with this. So what is the path forward?
Well, it was also a very positive statement. I mean, before I also met with the Ukrainians who had a meeting with President Trump and also said that it was a very good meeting, asking, how, U.S. can support also Ukraine and saying that, Russia's economy is not doing well, all what we also read in the post. So we have been on that line and we really welcome the shift in the tone.
The president also talked about even going further into even Russia. Is Europe prepared to buy more weapons to then give them to Ukraine?
Well, we are doing a lot. I mean, this year only our military support to Ukraine has been 25 billion, which is more than any other year. It is clear that we have to help Ukraine to defend themselves because, as President Zelensky said in his speech as well, I mean, if we allow Russia will just go further, we have to push them back. We have to also say that this is not okay and you cannot let the aggression pay off.
Do you have a sense of which European countries, though, are willing to put in more funds when it comes to Ukraine, whether or not it's funds directly or to actually buy those weapons?
Well, we have different initiatives also to help European countries to help Ukraine, but also invest more in their own defense. And we are putting a lot of funding on the table. Of course, it is difficult. It requires also member states to make some very difficult decisions like cutting social spending, but also raising taxes, which are not popular. That is very clear. But we are in this situation where we have to invest in defense. And the problem is that you need it when you actually don't feel the need yet. So you need to do the decisions way before you actually need the defense capabilities. And if you do it, it acts as a deterrent so that the aggressor would not look your way.
Trump also said yesterday the U.S. is prepared for more powerful sanctions, robust sanctions, tariffs on Russia, but only if the European Union is in lockstep. Now, we have seen movements the European Union is talking about when it comes to things like fossil fuels. They are ready to do these tariffs. But we are 3 years and 7 months into this war. Why did it take for President Trump to convince Brussels to do what Brussels probably knew from the very beginning they had to do?
No, excuse me. We have done 19 packages of sanctions, and we would like our partners to be in lockstep with us because we have put a lot of pressure. Then next, the package that we propose now has also crypto, financing institutions, also energy. Yes, what President Trump says about energy is true. We have been saying for the.
I know you specifically have been talking about this for years.
For quite some time, because we have been dependent on Russia, and now we are phasing out. And it's true that it should be faster. We are trying to push those few member states who are still buying Russian energy to show that actually, if you want this war to stop, you need to really cut off the funding of this war, which comes from the fossil fuels.
Hungary, Belgium, France. Do you think they're really prepared to do this?
I mean, these countries, the countries who are dependent on, some are making great steps and some are not. So clearly, some are great friends of President Trump, which has been also our appeal to President Trump to talk to them, like Hungary, for example, so that this is necessary. The neighbors around, Hungary, for example, have proposed solutions so that they can get energy from the neighbors and do not have to depend on Russia. But so far they haven't really wanted to, as the energy is much cheaper.
Do you view this posture now from the United States, some are calling it a full 180, do you view it as concrete? Is this tangible? How long will it last?
We welcome those statements and the change of tone, like I said. So let's build on this. Also, really tangible steps. I mean, on the European side, we have been keeping this line, also putting our money where our mouth is. Supporting Ukraine, their defense capabilities, investing more in our defense, and also pushing back Russia, putting pressure on Russia. What we want to see from all our allies.
One country that could really put pressure on Russia is China. Given the fact that you've been working with the United States when it comes to Russia, could more be done between the European Union and the U.S. to put pressure on China to then put pressure on Putin? The U.S. has tariffs on China. Is it time for the European Union to consider putting the walls up on China, not just what's going on in Ukraine, but also they're pretty much dismantling the European industrial base?
It is true. We have two big worries with China. One is the economic coercive practices that they are using against European companies, which are really hurting our companies, industry and economy. And the other part is them being the key enabler of Russia's war in Ukraine. So we had the EU-China summit. We are stressing all these points and really raising these points and also acting on them. If you look at the sanctions package, we are sanctioning also Chinese companies who are enabling this war to continue. So we are not, or let's put it this way, that we are believers of free trade, so we are not using tariffs as the measures, but we are putting pressure via other means.
I just want to finish on the incursions when it comes to European airspace. Friday, it happened in Estonia, a country you used to lead. Is Estonia and these countries prepared to do what the President, Donald Trump, thinks NATO allies should do? Shoot these Russian aircrafts down?
Well, NATO is a collective defense alliance, which means that attack on one is attack on all. This is Article 5. So it's clearly if those drones or airplanes are violating the airspace, are creating security risks, then there has to be proper response. The Estonia asked Article 4, which is consultations, how to continue, and all the member states in NATO, including the United States, have vowed to keep up their commitments.
Madam Kallas, thank you so much for your time on Bloomberg TV today. Caroline, Ed, of course, that was Europe's top diplomat welcoming the really reversal we saw from the President of the United States right here at the UN yesterday when it comes to Putin's invasion of Ukraine.
Bloomberg's Anne-Marie Horden at the United Nations. Thank you very much. So coming up on Bloomberg Tech, the largest US maker of computer memory chips gave an upbeat forecast for the current quarter. We'll talk about what's lifting Micron's outlook next, why the shares aren't doing so well. This is Bloomberg Tech.
Microsoft will start using AI models from Anthropic to help power its workplace AI assistant, a product that has so far, of course, been mostly driven by OpenAI. Starting today, business users of Microsoft's Copilot branded AI assistant, well, they will be able to toggle between OpenAI and Anthropic models for certain functions like digital research assistants or building customized AI tools. Bloomberg's Brody Ford joins us for this and so many other stories. Brody, we start with the idea that Microsoft's becoming less and less dependent on OpenAI and vice versa.
That's the big question for Microsoft, right? It's kind of staked its AI bets on the idea that OpenAI will be its golden goose. These two companies have slowly moved apart from one another, and today we see Microsoft making a big partnership with the other kind of leading frontier model maker of Anthropic, showing that, you know, they're testing the waters, they're looking around, they aren't as bet on the Altman show.
Brody, the big story in the market today is Oracle tapping corporate bonds, $15 billion, including a 40-year note, which is a rare thing. But actually, it just speaks to what you wrote about in the Tech in Depth newsletter. There are all these pledges, and Oracle and others are writing all these checks for future infrastructure, and now they're trying to work out how they're going to cover those checks.
Oracle is one of the great cash cow businesses of all time, but its cash flows went negative, and it's going to be negative for the next couple years. They've committed to serving OpenAI, serving customers like Meta with huge data centers, and that money's got to come from somewhere. And so folks have wondered where that will be. And so seeing them tap the debt markets in a big way today is not a shocker, but it's maybe a larger sum than we anticipated.
And how amazing that people are willing to commit to buying 40-year debt when still we're wondering if we win the AI race in that time. But I think it speaks to what was announced late yesterday as well. Yeah. OpenAI articulating those 5 new sites around the United States, the idea that they're going to be planning $400 billion of the $500 billion committed in Stargate. But what was really interesting, and Shireen Ghaffari wrote about this, was that basically Sam Altman's saying, we haven't quite got funding tied up here yet. We're having to be creative, basically, is what they're saying, and look at how NVIDIA invested in OpenAI off the back of that.
You're hearing these fears of a circular spending a lot more, right? That $100 billion is going from OpenAI to NVIDIA to Oracle and back, right? And the Oracle's new co-CEO said that in Texas yesterday as well, that, look, we're clearly doing something here. You can see it. We have ambitious plans. The money is something we're still figuring out. This is a historic amount of investment, and we're going to have to use interesting new structures, was, I think, his words.
There's 3 new sites, right, in this expansion of Stargate. Shackleford County, Texas, Donna Ana County, New Mexico, and then somewhere in the Midwest that we don't know about. Explain Oracle's involvement, because they are actually at the heart of this story, and I think it's worth lingering on.
Oracle has agreed to effectively be the infrastructure middle person, right? They're going to go out and find data center developers who have figured out the power. They're going to rent big old buildings from them, fill them with servers, and then use power from those servers and give it to OpenAI. They have committed to a pretty incredible project here, and it's work that's worth noting that Microsoft passed on. They said that for whatever reason they weren't going to do that. And so Oracle has found its way to be taken seriously in the cloud infrastructure game, did something huge, but now it has to deliver.
And has to find some money to do it.
Yep.
Bloomberg's Brody Ford. Great reporting. Thank you very much. The other big story out there in the market is Micron. Shares a little bit under pressure. The company reported a strong outlook for the current quarter, helped by demand for high bandwidth memory in the AI context. It's a classic scenario, Kara, I was talking about earlier, where it beat consensus on its outlook, but at the very high end of estimates, you know, this was a high bar kind of quarter. Let's get out to Kim Forrest, CIO at Boca Capital Partners. You know, the market's starting to understand that HBM is absolutely critical to the AI infrastructure build-out we've got. But still, such a high bar for Micron. What was your reaction and interpretation of those numbers?
I thought they were incredible because I had, consensus estimates kind of in my mind whenever I was looking at this stock. Now, the other thing that is missing from this equation is it's run up tremendously in the recent past. So I think there is a little about maybe some of the traders that aren't going to stay around in the name are out because of the great gains they've gotten in the recent past. So there's a little bit of profit taking going on, but really all arrows are green and pointed up. So I think the stock is pointed up and to the right. And some of the areas that I think are most kind of strange is old tech is coming back for them as well. And I mean, that's kind of great too for a lot of players if you are a tech-oriented investor. So regular servers, just the stuff that Microsoft and Oracle has been building for itself, for enterprise, to rent out, AWS, that sort of stuff is on the upswing. It has been missing for a couple of years, right? And then here's a crazy idea, PCs, because they're killing Windows 10. There is going to be increased demand for PCs and probably the higher end PCs as people start to play around with AI. So all arrows look upwards, and I don't really care what the stock's doing today. It generally does this, and it's not trading off quite as much as it had in the recent past on the day after earnings.
Well, Kim, trading up in the recent past is up 94% year to date, second best performer on the Philadelphia index this year. I'm going to ask you something generally about AI infrastructure. Are various technology companies writing checks that energy companies, the grid, utilities can't cash in the future? Like something has got to give here.
Yes, absolutely. We have this crazy thing called the physical world, right? That is running up against the virtual world. And I'm one of the people that really worry about this. I think AI is going to add productivity, but the OpenAI kind of model of we're going to have one big brain that you're going to tap into, it worries me. First of all, just tally up the expenses. I'm someone that came out of tech because the AI companies I was working for were not profitable because they didn't understand the problem. The cost of the problem had to be higher than the cost of the solution. And I don't really understand what LLMs are solving. Like, you can't do a quick, back of the envelope calculation and go, yeah, people are really going to benefit from these financially. So these are the things that I worry about, not just power, but who's going to pay for all this infrastructure? 40-year notes for Oracle. Lovely that they think they're going to get paid back shorter timeline than that. But I don't understand the use case where businesses are going to pay enormous sums of money to access these.
To cut to the chase, do you think this is more, the idea of big bubble rather than big bets?
I do. And it's a very, very big bubble because they've solved a very big problem, natural language processing. But people are conflating that it's more than that this is a thinking machine, and it is not. I think that this will be used. I think LLMs are very useful, but they are not the answer, the end-all, be-all of AI.
So therefore, exposure. At the moment, you talk about OpenAI, and there's a lot of private money going into OpenAI.
Yes.
But OpenAI's demand props up the future revenue streams of NVIDIA, maybe even Micron as well. How much can you keep buying in to these companies like a Micron that is posting gross margin in excess of 50% in the here and now?
Well, here's my model. It's the third option that we're not talking about, is that companies, and I'm not recommending them, I'm using them as an example. Palantir solves smaller problems with AI that still need the same sort of chips, the same sort of infrastructure, but not quite as much, right? So they're solving smaller problems at a smaller cost. And that, I think, is going to be the formula. And there will be many of these, but unlike OpenAI that seems to think that, we're going to have servers from New York to San Francisco, throughout the country, all of the country is going to have those. It's hyperbole. Of course, I don't think that. But, the scale is not the same as with a smaller AI sort of model.
Kim Forrest of Boca Capital Partners. Always love the straight talking. Thanks for joining. Jimmy Kimmel returned to the airwaves last night after Disney lifted its suspension following remarks made by the host about the assassination of Charlie Kirk. Here is what Kimmel had to say about the controversy.
And the truth is, I don't think what I have to say is going to make much of a difference. If you like me, you like me. If you don't, you don't. I have no illusions about changing anyone's mind. But I do want to make something clear because it's important to me as a human, and that is, you understand that it was never my intention to make light of the murder of a young man. I don't...
Bloomberg's Hannah Miller, who covers Hollywood and entertainment, joins us now. Emotional at times, but also fighting talks at others, particularly when targeted at Brendan Carr of the FCC and the White House.
Yeah, if you listen to the rest of that monologue, Jimmy goes hard after Brendan Carr and really calls him out for stifling free speech. And, he makes very clear he's not sorry about what exactly he said. He's sorry if he caused offense over the death of Charlie Kirk.
Hannah, the president reacted in a post on Truth Social, and we also had the reporting from Bloomberg about recent days, Kimmel meeting himself directly with Disney executives. What's the reporting we need to know about on that?
Yeah, so even before Jimmy Kimmel went on air, you had President Trump posting on Truth Social, making these vague legal threats, saying that he had previously gotten millions of dollars from ABC, referencing a past lawsuit that they had settled, and that he might go after them again. So, again, we're seeing this contentious relationship between the Trump administration and media.
And also the two major TV station owners, Sinclair, Nexstar, that put out the content to many, many Americans are still having Jimmy Kimmel Live on hold. So how does that impact Disney's business model here?
Yeah, so about 23% of the country was not able to see this. They saw other broadcasting, news programming, things like that. We've seen a lot of talk about the business impact when it comes to subscription cancellations. When you look at Disney Plus and Hulu, Jimmy Kimmel actually made a joke about that, where he read instructions about how to, get your subscription back if you did cancel.
Right.
So, it's been very interesting to see the impact on Disney.
Bloomberg's Hannah Miller and the team at Screen Time round the clock reporting. Really appreciate it. Welcome back to Bloomberg Tech. I want to get right to Alibaba's US-listed shares, or ADRs. We've just in the last couple of minutes come off a session high. We're up 9.5%, on track for the biggest jump in about a month. The shares trading at their highest levels since the middle of 2021. The story is really simple. Overnight, Alibaba said it was going to commit to spending even more than the $50 billion it had already committed for artificial intelligence. And that is something we see in China, Caro, from Huawei through to Tencent. But Alibaba, a key name, and clearly it's driving markets. And the last thing I'd say is I saw a headline on the terminal this morning that when those ADRs jumped in the pre-market, the rest of the market went with it. And we saw futures gain as well. So we're paying attention.
We are, to $35 billion added in market cap and to a new large language model update too from Alibaba. Let's get to it. Bloomberg's Henry Wren, who covers equities and tech, joins us now. And it does seem to be the fact that Alibaba is all in, whether it's offering cloud, whether it's expanding its investment, whether it's thinking about its own chips too.
Yes, it's about building an ecosystem. Thanks for having me. So it's Alibaba's annual developers conference, and lots of surprise. The biggest surprise, as you mentioned, is about them raising the capex guidance for AI capex over the next 3 years. We already knew from February that in the next 3 years they're going to commit over $50 billion of spending on AI infrastructure, but they said they will be spending more. But although that they didn't give specific numbers, but investors are already getting excited about their AI projects, so the shares rallied, of course. And on data center and cloud, the company said it has already been expanding overseas. It will continue to do so, and over the next year, it will be building data centers in countries like the Netherlands, France, and Brazil, and that's another plus. And on the model side, the company released this new QN Max 3 model, which according to the company is among the top in the charts, the benchmark as well. So all those are pluses, and for Chinese investors that are enthusiastic about AI developments, the shares have reacted positively.
Bloomberg's Henry Wren out of London. Thank you very much. China's biggest tech firms are pouring unprecedented sums into artificial intelligence, matching the massive investments already underway in the US. Global tech investment firm Prosus holds a significant stake in one of those giants, Tencent. Joining us now is CEO Fabrizio Bluisi, who visits us in San Francisco. You know, Henry did a good job breaking down what Alibaba had to say. You through your lens of Tencent, understand what's happening in China. How do you interpret and react to what Alibaba told us overnight?
Hello, Ed and Caroline. Pleasure to be here. Thanks for receiving me. We are extremely excited about AI in China. I know there is so much geopolitical tension about who is going to win. This is not like a simple win thing. This is going to change the world in the next 10, 20 years substantially, and the giants of China are investing substantially against that. Alibaba is doing a great work, but also Tencent is doing a great work. DeepSeek had a big impact in what everyone is doing here, also in Europe and US. So we are bullish. This is going to keep growing. I want to give you one extra data. China, 10 days ago, released its AI plus policy.
Yes.
Where they say in 3 years, 70% of the devices are going to be AI enabled using open source AI. In 10 years, the whole society is going to be disrupted by AI. So it's amazing how committed China is to AI. And I think it's our obligation in US to do that. It's our obligation as one of the biggest European companies to invest in Europe so we can keep the pace or do better.
You know, overall, what these Chinese technology companies share is their commitment to spend, but they are very different. They have different proportions of the business on e-commerce, pure cloud computing.
Yeah.
How should we distinguish Tencent's AI strategy from Alibaba? What is the piece of Tencent's AI plan that you are most bullish on?
Look, Tencent has WeChat and WeChat Pay, and all the communications in China runs against through WeChat, and the impacts of AI in communications, in companionship is amazing, and now in shopping through messaging. So we are very bullish that there is a lot of things to do through Tencent. But I want to remind you all, we are trying to replicate that in Europe, India, and Latin America. That's what Prosus is doing today. I think China is playing very well, US is playing very well, but there is a big space for other big tech champions in Europe. Europe is more or less the size of the American economy, but has like ASML, Prosus, Spotify, Mistral, maybe $300 or $400 billion companies. We believe there will be $1 trillion company in Europe. That's why we're investing hard in Europe to build there.
Yes.
The same thing in India. We're investing hard in India. We're investing a lot in Latin America. And it's good to remind sometimes everyone, including my US friends, AI is going to be a global thing, and we have many global tech champions around the world. That's what Prosus is doing.
Fabrizio, you're trying to make Prosus that global tech champion. Can you describe the exact tactic of that at the moment? Because it seems like you're all in on this idea of lifestyle e-commerce system more broadly. How do you become the bigger than the sum of your parts?
Definitely. We are very excited about what we are doing. Our first part of the strategy is to invest in our 3 ecosystems. Latin America, where we are doing very well through iFood and a whole ecosystem around iFood. For example, the Despegar acquisition we did for $2 billion a few months ago. In India, we are making many investments that are growing faster through AI. For example, today we announced the investment in the biggest mobility player in India. And in Europe, we are really investing to develop technology and innovation in Europe. We did the Just Eat Takeaway acquisition there just 5 months ago. It was approved by European Commission in 5 months, what is like a record time. We are very excited about that. That's what Europe needs to move faster, to take more risk, and to create local champions. We expected to close this offer in 1 week, next Wednesday actually. And this is just the first step. We are going to keep investing harder in Europe. We are announcing, we are launching next week the AI House Amsterdam, where we have hundreds of people together with universities and other companies developing local models in Amsterdam in the Netherlands, because we need players investing really hard there. I'm quite confident with the level of scale that we have with 30,000 people, the level of investment in disruptive AI models. We will help Europe to position itself as a leader in this race.
What about other areas of M&A then, Fabrizio? Because you're trying to make your portfolio ever more focused. Where could you make additional add-ons? Where's interesting?
As I said, we spent $7 billion the last few months. We are going to keep spending, hoping the next few days announce another big investment in France of a lot of money.
Do it now, Fabrizio.
Yeah, just a few days to keep investing a lot in Europe. My commitment was to invest up to $15 billion in Europe, and we are moving fast on this direction. I'm a little frustrated. The European Commission also asked me to divest $2 billion, $1 billion before I keep investing. I think this is the wrong mindset. Europe needs to invest 10. I can do it by myself, $50, $100 billion, and that's what Europe needs.
Fabrizio, I want to hold you to account on something, because you said to our US audience, don't forget Europe. When I look at what you have done, there's been some selling down in Delivery Hero. Also some of the Chinese, Meituan, for example.
Yeah.
So net, you're going to continue adding proportionately to the European investment and taking potentially from other parts.
Not proportionally. We are going to invest substantially more in Europe. We have up to $15 billion to invest in Europe. The Delivery Hero discussion about selling down was our agreement with the European Commission. They asked us to divest
That's
a little.
why I asked, yes.
And I disagree. Thank you, European Commission. We did a deal in 5 months. We are moving fast. That's what Europe needs. But they also said, please sell a little. That's the wrong strategy. We had to invest more, $15 billion faster. That's what I'm going to keep talking in Brussels. And that's what I think Europe needs. Everyone was talking this week about the Mario Draghi report.
Yes.
He said Europe needs to be more aggressive, needs to consolidate local champions. 1 year after the report, just 11% of the report was implemented. That's not enough. But the good news, Prosus is very committed to help, collaborate, work together. We need bigger companies investing more and fast in Europe, specifically in developing AI. So I'm quite excited. I know many times here in TV we say, is it a bubble? It's not. I'm absolutely sure the impact in AI in the next 10 years is going to completely change who are the winners. So if you're not moving fast, and the impact in AI today in Prosus is disruptive. We are moving faster. We have better service for our customers. We are more efficient. Obviously, there is lots of people investing a lot, specifically here in the US. Obviously, lots of the companies that people are investing today, they are also going to fail. That's part of the process. We're not going to have only winners. We have winners and losers. We are working 3 times harder in Prosus to make sure that we are one of those winners, specifically in Europe and India and Latin America.
Well, let us know which is the French winner in the next few days. Fabrizio Luisi, great to have you back, Prosus CEO. Now let's turn to the efforts to harness the power of AI. That's what Ruth Porat, Alphabet's president and CIO, has just been discussing with Bloomberg's Francine Lacqua at the Bloomberg Global Forum in New York. Take a listen.
I think where we are with AI is it is both moving really fast and really slow. And what I mean by that is when you focus on the science, the breakthroughs in science are breathtaking, the pace at which we're seeing advancement. And I think one of the best ways to think about that is actually with my colleague Demis Hassabis, who runs Google DeepMind, and the work he did to develop something called AlphaFold, which is the 3D prediction of protein structures, which is viewed as the single greatest contribution to drug discovery in our lifetime. And he went from working on that, he's been in neuroscience and computer science, physics for his whole life, but 4 years ago started on this journey to take on what had been a 50-year grand challenge to predict protein structure of the protein structures for all known proteins. And in 4 years, he went from an idea that people challenged, is it possible? And he said, why not? To a solution, which has now been open sourced. 3 million scientists around the world are using it, 190 countries, and the Nobel Prize. That is the speed of change, and we're seeing that across Google DeepMind. What is slow is actually the implementation in both the public and the private sector. We're still very early days. The excitement about AI is across the board. The economic upside, $4 trillion potential contribution to GDP by 2030 with proper application across industry and the public sector, what's called diffusion. It's the better delivery of healthcare, better delivery of education. And that is still very early days. AI is clearly a lot more than a chatbot. It's about a fundamental rethink of the processes that we have. And I would say for each one of us as leaders, we need to start on that journey.
That was Alphabet President and CIO Ruth Porat from the Bloomberg Philanthropies Global Forum earlier today. Okay, coming up, Steve Zhang, founder of Kindred Ventures, joins us for a conversation about the opportunities all of these AI announcements create for the private investor, for the venture capitalist. That's coming up next. This is Bloomberg Tech. Companies are investing hundreds of billions of dollars in AI data centers. We've been talking about that. Announcements just keep coming from Alibaba to OpenAI and NVIDIA on Monday. I want to get the private market perspective on this with Steve Zhang, founder of Kindred Ventures, an early AI investor, and here with us for VC Spotlight. And you're operating at a different level of the curve, right? I think that's one way of putting it. But I do want to get your reaction to that OpenAI and NVIDIA deal, because it's all of it that's happening in the market right now.
Right, and thank you for having me. It's great to be back. It's both surprising in scale, but not surprising that it's happening. Number one, I think we're undershooting or underestimating how much compute we need for not only training, but for inference. That growth in demand is scaling out in every direction right now. We're seeing that across early stage startups as well as growth stage startups and public companies. So if you think about what's happening today, globally, first off, every region is now in the AI competition, the model competition race. Number two, there are specialized models in video, in audio, in voices, in speech models, physics models, medical science models. You look at what DeepMind is doing. You look at what small startups like Sofont are doing in medical sciences. And then you also see what's happening in particular with demand. And so we're just moving from an experimental phase into a commercial application phase. So everything that's happened up until today has just been in that experimental testing phase. And so if you think about TikTok and Instagram and YouTube on the consumer level, there's double-digit adoption right now on creators and users there using AI tools. And then if you look at enterprises and small businesses, they're already starting to use voice AI for call centers. Right. They're using it to write reports. They're using it for search and answers. So we're just at the beginning, and I think every single, I looked back yesterday before we came on today, and I saw all the projections from a year ago, and we're already surpassing that by 10x today. But inference demand alone.
But Steve, the reason we come to you is because the prowess of the bets that you've already met, and we think about Perplexity and we think about Play AI. How do you ensure, Steve, that you're not part of what some are starting to feel is like a house of cards, of everyone giving money to the same sort of players, and ultimately if the productivity doesn't achieve, if the money doesn't achieve, then suddenly we start to see some real holes?
I think what's important here is that you do see the demand and you do see the uptake commercially. You see revenues, you see adoption, you see usage. I'll give you an example of this. So today, in terms of generative media, generative video is relatively new. Well, let's say it's about a year and a half old. Google, ByteDance, and many other small startups are providing these models. The compute just for that, which is showing up on YouTube, which is showing up in video ads, which is now showing up through Creatify on Comcast and Universal Channel video ads now, is making real money. It's making real CPMs for real brands. And so as long as there is economic productivity on the demand side, that's why you're seeing all this scaling of cost of investment in GPUs, data centers, and energy. And you see these long-term contracts. $100 billion was an amazing size for a SoftBank Vision Fund 5 years ago. And today, that's just one company making investment for a round-trip commercial deal.
Steve, you were in the green room, right, when Fabrizio Borghese was sat in that chair, and he talked about a bubble in the context that, like, well, that's normal part of the game. Some failures, you need to find successes. Do you think about it in those terms in the context of there's such a capital concentration in these few names?
There's always going to be an arbitrage between current demand and economic productivity revenue, right? And the investment capital and the timeline in between. Bubbles are necessary for a collection and hyper focus of talent, engineering talent, research talent, building talent, as well as capital. And that's what creates that enormous growth and velocity in any sort of tech cycle. We saw this every tech cycle. This tech cycle is very different because there's real revenue and commercial application happening. So again, look at GPUs as just one part of this. Energy is the other part. Data center space is the other. Then then there's a software infrastructure layer there, so-called middleware, which was a bad word in the last tech cycle, but is actually where value capture and differentiation happens now. And so this is really important. You see companies like Together AI, you see companies like FAL in the generative media cloud space. These companies, and CoreWeave. CoreWeave is a company that started out as a Bitcoin mining data center.
Steve, can I go to that? Can I go to crypto? Because we're talking about a potential bubble, and I know that you've got a lot of experience in crypto. I'm looking at Tether potentially looking at funding with a valuation of $500 billion. Is that a bubble sign to you or not?
The stable coins right now and crypto, there's an interesting thing happening right now where fintech, as we knew it, global payments infrastructure, companies like Stripe and many other companies fragmented around the world in FX, is getting slowly transformed by crypto, especially stable coins. It is, again, very easy to underestimate this. I think it's harder to really look at the frontier edge and say how big could this be. But you see the U.S. government and many other foreign governments, this is an area, unlike AI, where there isn't a concept of sovereign crypto. In AI, we have sovereign AI, and there's a competition. In crypto, interestingly, there's much more of a cross-border collaboration that wants to be on blockchains. This is obviously very recent in terms of government push with this new administration, but underlying that is still compute. Same data centers that are providing AI compute, high-performance compute, are also supplying it for crypto.
So fascinating, Steve Zhang, managing partner and founder of Kindred Ventures, giving us the full picture. Social media app Instagram is proving more popular than ever, reaching 3 billion monthly users. This is parent company Meta looks to short-form videos and private messaging to really drive the growth. For more, Bloomberg's Kurt Wagner joins us. You've had a really interesting conversation with Adam Mosseri. What did he detail about the forward path for Instagram?
Yeah, the big thing for me that I took away is that they're leaning into these products that have not necessarily been historically how you think of Instagram. You think of these glossy life moments, the traditional feed. They're leaning into DMs, leaning into Reels, stories, things like that. So Instagram has changed a lot since 2010, and the 3 billion, they're leaning into that change, I think.
Kurt, part of the discussion was about testing and changes to the algorithm. What are they doing?
They're going to let people essentially pick the topics they want to see more of, so be more explicit in the things that they're hoping to see. You can pick your favorite sports team. You can go very granular. And they say they're able to do this because of the advancements in AI. They're able to read videos with AI, determine exactly what's in them, and then feed that to you. Historically, Ed, it's been more implicit, like they will look at your behavior and try and guess what you like. They're going to run this test where people can be a lot more specific about what they want to see and hopefully change their algorithm to show that.
And also interesting where they're testing that and which parts of the globe they really want to penetrate.
Yeah, so the algorithm test is going to be in several different markets. They are doing a test in India, specifically around Reels, where they're going to open the app into Reels. So instead of opening into that main feed, you're now going to get basically TikTok when you open Instagram.
Where it's banned in India.
I was going to say, and there's a reason they're doing it in India, because TikTok is banned in India, right? So this is a great opportunity for them to kind of take advantage of the fact that a core competitor is not in that market.
Bloomberg's Kurt Wagner. It's a kind of must-read based on an interview with Adam Mosseri, who heads up Instagram. Really appreciate you joining the show on it. That does it for this edition of Bloomberg Tech, Karen.
You do not want to forget to check out our podcast. There is so much debate out there around AI. Stick with us for it. You can find it on the terminal. So it's online on Apple, Spotify, and iHeart. What an incredible time to keep on telling these stories. This is Bloomberg Tech.